Big question here. What does this PC report really mean? We always say it's the Fed's preferred read on inflation, but the Fed's kind of signaled to us they prefer to focus on the labor market right now. We got that big jobs report coming up on Friday. In your mind, put this in context. How big is this?
Yeah, I think you framed it perfectly. It's clear that the Fed has sort of shifted their focus away from inflation for the moment. I mean, look, it's the dual mandate, right? So it matters, but I think that they're certainly placing a bit more emphasis on labor at this point. So look, they all matter. All of these reports matter. They will always matter. But I think, when I think about the sort of the inflation outlook over the coming year, I think we're in a much more sort of benign inflation rate environment. And I think the Fed feels very comfortable with that. I mean, there's the price level part of this, which is a completely separate conversation. But I think from a sort of an inflation rate perspective, I think we're in a much more palatable backdrop for the Fed, right? I mean, we're now drifting toward the 2% target.
Okay.
So that gives them the sort of the benefit of being able to focus more on labor, which, look, we've been getting some pretty mixed signals on the labor backdrop, right? I mean, the one real standout was the payroll report from last month. But prior to that, you had some pretty soft outcomes. So I know people seem to be really wanting to buy into this idea that, labor is just sort of, really reaccelerating from here. I would urge some caution on that because there's an assortment of other labor data that have really come in quite mixed. So I'm not making the argument that labor sort of, breaking
Tom,
down.
I think you're actually leading me to my next question about the jobs report that's coming up. I think you're just really leading me into that. We're going to talk about that jobs report, obviously, on Friday. We're going to examine it. It's going to be a market mover. PCE sounds like you think it could move the markets, but we know that jobs report is going to move the markets. A big factor in this jobs report is the skewing of it, whether it's the strike, severe weather. There's a lot of different things going on. So when we look at this jobs report, how are you going to look at it? How do you think the Fed's going to look at it? Are they going to take into account that we did have that East and Gulfport strike, that we've had hurricanes, that we've had a lot of other just issues that could change the numbers?
Yeah, I think there's no question about that, right? I mean, even the BLS, the agency that pulls this report together, even they've already come out and said, hey, look, there's probably going to be about a 40,000 impact from the strike. So yeah, I think you're going to have to look through some of the noise. I mean, this report is going to be volatile, to say the least, in an already pretty volatile report between the strikes and the hurricane. So, we'll all try to really sort of sift through it to understand what the impact from both of those is going to be. But I think that this is one of these reports where you're going to have to fade, I think, the outcome. I mean, if you look at the range of estimates, the range of estimates is incredibly wide. I mean, I saw someone looking for a negative and someone looking for a plus like 165, I think. So a pretty wide range of estimates. And I think what that suggests to us is that you probably fade this number to some extent and wait until you get to next month.